I'm Danielle Hale, Chief Economist at Realtor.com, and here's what you need to know this week. Business optimism improved in January, but remains quite low. In line with January's big job numbers and still low jobless claims figures, more small business owners reported difficulty finding workers, and they had to increase compensation. We saw more disinflation, or slowing price growth, overall and among core consumer prices in January. But the improvement was smaller than in recent months. And one big exception was prices for shelter, including rents, which continued to climb faster. Producer price growth, another inflation indicator, also slowed despite a large month-to-month jump. Despite price increases, consumers are still spending. Retail sales jumped higher after slipping in December. Compared to last year, sales roughly kept pace with inflation, signaling very little real growth. Sales at food and drinking places saw the biggest increase in both January and the last year, reflecting the trend away from buying things. Taken together, these data signal a still robust economy that is weathering monetary tightening. While inflation is slowing, it's still too high. Several Fed speakers this week reinforced the idea that the Fed is not yet done raising rates. And in fact, while it's still a long shot, the market priced in slightly higher odds of a larger half-point Fed rate hike in March. Turning to housing, stronger economic data pushed mortgage rates higher for a second week, reducing buyer purchase power. But mortgage rates remain well below their fall 2022 highs. In housing construction, builders were more optimistic for a second month, but housing starts actually decreased. Permits were largely flat as increases in multifamily made up for a slip in single-family permits. Of note, for a fourth straight month, the number of multifamily units under construction hit a record high. These homes, which are mostly built for rent, will eventually help lift low vacancy rates, increase options for renters, and further tame rent growth, eventually contributing to cooler inflation. Realtor.com housing data this week showed that the stalemate continues. The number of homes on the market was still up significantly from 1 year ago, even though fewer homeowners have recently decided to sell. High home prices and mortgage rates have cut into buyer interest, and homes are sitting longer on the market. Nevertheless, the typical asking price continues to grow, a sign of still high hopes from sellers. But hopes are sometimes adjusted, and January data showed an increasing share of sellers made a price reduction, a sign that buyers in today's housing market have more negotiating power. Amid all these challenges, the fourth quarter homeownership rate was up above pre-pandemic levels for owners under age 45. You'll find all the details, along with our housing data for download, at Realtor.com/research. And you can also follow us on Twitter for real-time updates.